Let's look at the euro / the Indian rupee. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. We will go into the forex market. Let's quickly get a bit of an overlook of the market. Very big moves to the upside now. So the market has become a bit more erratic, and that is something that is even further strengthening the merits of having a market neutral portfolio. Okay, if you look here at the pair, so euro, Indian rupee, performance from the 52-week low and 52-week highs. If we go to the charts, because we cannot look at the seasonality because stockcharts.com do not have seasonality data. But what I did find in the charts were some relatively consistent cycle patterns. So this is the pair weekly data points, way back here to 1998. So you can see this rise and decline cycles. In blue here, these are the major cycle patterns, and you can see that they are rather consistent. And based on the blue major cycle, the current rising phase is likely to might temporarily peak a bit. So if we zoom in a bit here, you see we have these major cycles, but also within the major cycles you have these smaller gray cycles. So let's remove here the big one to make it a bit easier to see. So even if we go further back here, you can see these cycle rhythms. In light gray here, cycles, cycle, cycle, rise, decline, suggesting that as far as the medium cycles, we could be starting here a bit of a rising phase. And within the medium cycles, you have smaller cycles. As you can see here, 1, 2, 3, 1, 2, 3, which is, and you can see it here, reflected in the price action of the actual pair, which is very interesting. And this pattern repeats itself even when we go further back, which is very interesting. It is not perfect, of course. Time cycles, if they were perfect, it would basically be like a way to look into the future like a psychic and print money. But the benefit of a cycle pattern that is reliable, is that you can make trades that have a higher probability of success, because there is this not seasonality in the classical sense that we look at with stock charts, with the months. There's more like a seasonality similar to seasons, like inhale, exhale, like you go from spring to winter. Okay, anyway, so those are the cycle patterns. If you look here at the moving averages as an example, you can see that throughout this rally, the 20-week moving. By the way, there might be some drilling in the background, but that's something I cannot stop. Okay, so the 20-week moving average, it's been relatively consistent. That is interesting. It has functioned as a support and resistance level for some time, like here, resistance, resistance, resistance. Then it becomes a rather reliable support level. Either we bounce from the moving average or we dance around it. If you look here at RSI, we are more or less in the neutral zones when it comes to the weeklies. PPO, nothing like extreme there either. We have been higher up in the past, even if we go further back. Hence, when it comes to these major rising cycles, the biggest ones, there could be more left. Let's look here at the daily data points. Well, first, let's get the correlation. So we have a 65% positive correlation here with the S&P 500. Okay, so here are the daily data points. So here you can see the time cycles in more nuance. And it is quite remarkable how consistent they are. The thing about cycles is that cycle patterns is that they work until they don't. So that is just something you have to be aware of. If you see like a stock which has amazing cycle patterns, then you can be like long, short, long, short, long, short. But when the cycle breaks, then of course, I mean, you should have some kind of protection in place in case something surprising happens. As an example, before the whole lockdown, there were many spectacular time cycles across all kinds of commodities, stocks, ETFs, you name it. But the lockdown broke many of these cycles, so it was like a disturbance in the force. But yeah, it's a bit of a digression, but it's something to just think about if you are going to get into cycle analysis, which I'm a huge fan of. Okay, so looking at the medium cycle here, that one suggests a bit of a downward pressure. But then you have these smaller cycles here with a new rising cycle. So the way to interpret it is that we have, we had the big cycle patterns, and then we have the medium, and then you have the small. The smaller cycles will have, I guess you could say they have the magnetic pull of the smaller cycle is less than the medium cycle, which in turn is less than the major cycle. So that is how you can sort of interpret cycle analysis, even though there are multiple cycles. Because if you don't do that, then it becomes a mess. Then you have like conflicting cycles, and then it's like, oh, what do I do? There is the consider the magnetic pull effect. Okay, so here we do have this breakout above this, in this case, blue 100-day moving average. See here that we have been testing it here. It was resistance, rather surgical resistance, so it is a big deal. What was resistance can become support. Here it functioned very well as support. Then it was hammered too many times, and then it broke, but then we reclaimed it. Here we dance around it, and today we are trying to break above it. If we can stay above it, that is a clearly bullish sign. No problems here on the RSI. We are basically in the neutral zone. Looking here at the PPO, that one is also looking, I mean, there's no problem there either. There's no it's not excessively too high or too low. Basically Goldilocks. So if I were to sum up my taker on the Euro/Indian Rupee pair, looking at the long-term horizon, we could clearly make the case that looking at it really long term, there is this bullish momentum in favor of the euro. And looking here at the shorter time frames, we do see that there is a potentiality of a breakout, which would increase, would accelerate the bullish momentum. The reason why it is very important to think about the cycle patterns is because of the way this one behaves. As you can see, I think it is quite clear that it has these cycles. It moves up and down, hence it can be very frustrating to trade if you do not have the cycles as a backdrop. Okay, whatever you do, of course, in this market, forex, stocks, you name it, it is rather important to be diversified in a statistical sense, which is why it is smart to look at statistical correlations. So in this instance, there's 65% positive correlation with S&P 500. It's not that strong. It is certainly towards the, I mean, it obviously is positive, but it's not Goldilocks, but it is approaching more of a Goldilocks territory where it's not too strong in the positive direction nor too strong in the negative direction, because if it's too negative, then you could have a market neutral portfolio where everything cancel each other out, and you basically have no returns, which is obviously going to be very frustrating.